Here we are live. Thank you so much for joining us. We're going to call this live segment going forward Real Estate Investor Market Update. And what we're trying to do, it's kind of a trying time right now. We want to add some clarity. We want to take the fear out of what's going on. Almost all of our guests, well, I'm assuming all of our guests have already been through these market changes. I know I've been beat up a lot, and I'm old, so it's not only do I bruise easy because of my age, it adds a little bit of wisdom, and we've seen these cycles before. Mm-hmm. We believe this is going to be temporary. My name is Bill Fairman. I'm with Carolina Capital Management. This is my co-host, Jonathan Davis. I am currently getting a feedback in my ear, so if I'm hesitating. My name is Bill Fairman. I'm with Carolina Capital Management. What I'd like to do is introduce our guests. If all of our guests will put themselves on mute for a moment, that will help me out. Again, not only am I old, but I'm easily confused. So we have with us today Mike Zlotnick of Tempo Funding. He's in the Brooklyn area of New York. He does lending as well as commercial properties in a fund, and he's also a mathematician by trade. So very smart guy. He always sounds a lot smarter than the rest of us. We also have Jacob Vanderslice. He's with Van West Partners. They also are in the commercial space. I think most of that is in the self-storage. Not if I'm saying that correct. Okay. Yeah. He says yes. We have Glenn Stromberg of Stromberg Investment Group. He is in what we like to call the real estate space. So he specializes in mobile homes on land, and all of those are for turnkey rental purposes. We have Chris Miles of Money Ripples. He is the anti-financial advisor, and we're going to talk about a lot of stuff from his perspective. And we have Fuquan Bile, he's not on yet, but I'm assuming he will be here shortly. He's with NNG Capital. So before we get started, guys, I'd like to talk about the bill that was passed last night by the Senate. Mm-hmm. There's a couple little things I want to highlight in there. If you're a small business owner and you're worried about keeping cash flow going, this is going to help, but if you need it tomorrow, it's not going to help.
Yeah, if you need it tomorrow, it's not. But if you can hold tight for 2 or 3 weeks, I think it will definitely be very helpful to a lot of small business owners.
By the way, before I get into this any further, I want Jonathan's wife to realize we are more than 6 feet apart. It's just when you're on camera, it makes you look a lot closer.
That's right.
It adds weight, but it also makes the room look smaller. He's not really this close to me. So a couple of little highlights from the bill is your local bank. If you have a bank relationship with your local banker, that's where you need to go to get this stimulus loan. Mm-hmm. And it's going to be for payroll taxes, health insurance benefits that you're paying your employees, rent or mortgage, mm-hmm. utilities, insurance payments.
Yeah.
I'm not sure how long for, but it's going to be a fully guaranteed loan from the government. So it's going to be a lot easier for the banks to underwrite these because, hey, they're going to use their standard underwriting practices. However, they're not going to really hesitate not to give a loan.
Yeah, knowing that
as long as you're a qualified, borrower, mm-hmm. because the government is going to back it up. And if you, don't. And by the way, there's a little bit of. It's also payroll, and there's a little bit of concern on whether it's for retention or rehiring. And it did say rehire and retain.
I thought it was for both.
Or retain and rehire. Mm-hmm. A lot of people are concerned there because we can't wait for government. A lot of us had to move, right away because, hey, you had no revenue coming in. You had people there not working. What are you going to do? You can't wait for government to make up their mind. And by the way, it's going to be 10 days before they even get guidelines on this, and it still has to be passed by the House.
Exactly.
So it's going to be a little while before you get there, but what you need to do is make sure you call your local banker right away. Make sure you get in line, let them know that you want to do this, and go ahead and get your normal stuff that you would get for a loan, your tax returns, your balance sheets, all that stuff, right?
Yeah, go ahead and get it started. Yes. Yeah. No matter what the guidelines end up being, it's always prudent to get going.
Yeah.
Yeah.
And if you're trying to get these SBA loans that are for disaster stuff, some of us heard some horror stories last night from a dentist that was involved in a flood, and it was a nightmare trying to get that same kind of disaster SBA stuff. And they ended up coming out of pocket with most of it. So, okay, call your banker, get this all set up.
Yeah.
I'm going to start off with a question before I get there. Hey, Fuquan,
He's trying to
just smile.
He's on.
So I want to tell everyone that's watching, you can chat and ask questions to the panelists. We'll see them, and if time allows, we'll ask them while we're on the air. If not, then we'll try to answer them offline. So, Jacob, I'm going to start with you. What part of the commercial real estate space do you see having the biggest issues, short term, long term, and why?
Got it fixed.
That's okay.
Thanks for having us on. My name is Jake Vanderslice. I'm a principal at Van West Partners. We're a private equity real estate investment company based out of Denver. We focus on a variety of asset classes, mainly self-storage. We've got some retail. We do residential as well. The fallout that we've seen so far that's been most precipitous and most alarming is within retail and hospitality. I mean, you've got most of America right now, especially in our geography, where retail businesses have completely shut down. Tenants can't pay their rent. Landlords have a problem servicing their debt. We've heard of a lot of discussions on payment deferrals with various landlords and their bankers. So retail has definitely been a big one that we're seeing. Another one that we're seeing too is hospitality. I think before the virus really spooled up, vacancy or commercial or hotel occupancy rather in Denver was roughly at about 5% before they closed all the hotels. Typically in March, they're tracking around 71% occupancy. So just a precipitous drop there. So those are really the two big asset classes that we're concerned with, retail and hospitality. A third, which hasn't really manifested itself yet, we think is going to be workforce housing, especially C+, B- multifamily. A lot of the tenant base in those product types are hand to mouth retail workers making $20 an hour. They're bumped up with roommates, and those guys are losing their jobs. So we could see a problem happening there too. But those are the three main areas that we're concerned with.
Excellent. So, Mike, let me pose the same question to you.
Sure. Mike Zlotnick, fund manager. Easy way to find me is bigmikefund.com. That's the name of the podcast, and that's our website. I'm a fund manager. We have a broad, diversified portfolio of assets. And the areas of concern, for sure, as Jake mentioned, hospitality. That is in a deep, deep hole, and it'll continue to be there. And we're already seeing all kinds of data confirming that. Retail, I literally just had a call with a shopping center operator who does have a number of shopping plazas, not the malls. And they're waiting for the data on April 1st. Most of those malls are, well, not malls, I'm sorry, shopping centers are grocer anchored. So grocery stores are staying in business, and they're likely going to continue to pay. People need to eat, even though there's a shift to delivery versus going to a store. But shopping plazas with some of these essential businesses probably will survive. They're certainly going to take some level of a beating. So that sector, again, not complete shopping oriented. Plazas are okay. Big malls are in horrible shape, for sure. The one sector that seems to be picking up, and again, this is a contrast. Some's going down, something else going up, is a self-storage. The data we're seeing is that the self-storage is picking up right now. As economy is going to hit it, it's going to likely hit the recession. The self-storage generally does pretty well. Some office might get hit, obviously closed. So the office that leases to brick and mortar is in difficult times. The office space that leases to the businesses that can operate remotely can continue to pay rents, maybe somewhat reduced rents. But if it's a white collar, when the crisis passes, those offices will continue to operate. We expect some level of demand falling for the office space over the next few years. But in the short run, really, the key question to ask is what type of tenants they have, and whether it's a blue collar or white collar employment. The white collar will do fine, or at least not as bad. The other sector that Jake mentioned might take some level of a correction is affordable housing, although it's really a function of how affordable. If most folks in those apartment complexes are Section 8 and they're getting government help, unemployment, they're probably going to continue to pay rent. There's nowhere to downgrade. So, but the blue collar, sort of somewhat above that, it's going to be a trench of blue collar multifamily. Those will take some level of a beating if this is a prolonged recession and prolonged crisis. But the very low end probably will be okay because of the government support. So,
thanks, Mike.
There's going to be a shift, obviously, in the market. If you've shifted your restaurant business to really takeout or delivery, you don't have to be in a retail place. You can have that business in a more of those, warehouse type spaces, because you're not really going to have that many people coming if you're delivering.
Yeah.
So